Today is Wednesday, December 11th, 2024, and we are going to dive into the changes. The Bank of Canada has made an announcement today, and I'm here with Dana Lynn from Forefront Mortgages, and Dana's going to give us a nice little overview of what all of these changes mean for us here on beautiful Vancouver Island.
Yes, thank you. Thank you for having me, Melanie.
Yeah, my pleasure. Yeah, so we had a change today. Do you want to just tell us a little bit about that, the 3.25%?
Absolutely. Today, the Bank of Canada announced another half-point rate decrease. So that's really good news for people on variable rate mortgages or people that have HELOCs or any kind of revolving credit. So they'll see their mortgage payments and credit line payments come down based on the Bank of Canada's rate announcement. It was a big one. I think Bank of Canada's saying that they're probably going to slow it down a little bit in the new year, but still potentially some more rate decreases to come in 2025.
Right. So the next one is January 29th, I
Correct.
believe.
Yep. And it's very much data driven. So it will be based on inflation. It will also be based on unemployment data that comes through. But absolutely seeing the rates starting to come back to normal levels.
Mm-hmm. Yeah. And so what do you feel that this means for the buyers who are out there there are many of my clients and buyers in our community who have been quietly watching the market. They're sitting on the sidelines and waiting to hear about what's going to happen today. And so do you have any thoughts on?
I think a lot of people are starting to feel a little bit more comfortable with the idea that rates are coming down, and those that have been waiting for this to happen are now actively looking and actively writing offers because there's still some deals to be had. And not only that, their payments will be more affordable. So they'll qualify for more, their payments will be more affordable, which is making it more enticing to start writing offers.
Yeah, I've been finding the overall sentiment is more positive. People are just feeling better about getting out there and looking again.
Absolutely.
Yeah. And then what are the changes in some programs that are coming up here in December that people can research? And
excellent. We have some great news coming out for insured purchases where the threshold for purchase price is now going to be going up to 1.5 million. That does mean that you have to have a significant amount of household income, but it's really great for maybe young professionals that haven't built a lot of wealth yet or don't have that savings, but they do have the income to qualify. You're looking at probably a household income of around $275,000 a year to get to that upper 1.5 million with the minimum down payment requirement. Secondly, a really big one for first-time home buyers is the introduction of 30-year amortizations, which allows people to amortize their mortgage over 30 years as opposed to previously it was 25 years, which makes mortgage payments more affordable, allows them to qualify for maybe a little bit more in terms of purchase price. So it's really, really helpful to those first-time home buyers. And just as a side note, first-time home buyers, it doesn't mean that you've never owned a home before. It just means you haven't lived or owned in a house that you own for the last 4 years. You or your spouse haven't owned a home of your own in the last 4 years.
So there are some interesting logistical...
Absolutely. It's best to definitely check in with your mortgage professional to learn more about what it means to be a first-time home buyer. Yeah. If you're interested in newly constructed purchases from a developer, it doesn't matter if you're a first-time home buyer or not, you would be eligible for that 30-year amortization, which is great news for everybody, really.
Yeah, and we've had so much construction here in the Parksville community, so that's...
we see it everywhere when we look around. We're like, oh, there's another one. And it's actually really nice to see that there's going to be, some supply for people, and it's a wonderful change, and it will help a lot of first-time home buyers and people that are not first-time home buyers just have their payments at a place that makes them feel, maybe a little more comfortable. Especially as we watch the rates come down.
For sure. And for our current homeowners who live in our community and may have a mortgage renewal coming up, do you have any thoughts on tips and best practices?
Absolutely. I think it's, first of all, very important to speak with your lender when you know your mortgage is about to mature, to know what they're offering you. And 2025 and 2026 will be big years for mortgage renewals, especially for people that entered the market in 2020 and 2021, maybe early 2022, and you were a first-time home buyer, because you came in at a time that were interest rates were just so low. It was historically low interest rates at that time. Right. So now you're looking at more, higher than average. And so it's really important to negotiate with your lender or look to see if it makes sense to work with a different lender when your mortgage renews. And then also determine, if you want your payments to kind of stay in the same ballpark of where they were when you maybe fixed in 2020 or 2021, potentially look at re-amortizing your mortgage to a 30-year mortgage to keep those payments lower. Your obligation for payments is low. You can still make extra payments to keep on track with the amortization you were on. But yeah, there's a lot to think about when it comes to renewals. And certainly it's good to have a second opinion from an independent broker, such as myself, to know, okay, is this a fair rate that I'm being given from my current lender?
Right. Yeah, makes sense.
Yeah.
And so when someone comes to you with the question of what are the pros and cons of going with a variable versus a fixed, what are you recommending these days?
Well, with the rates are coming down, so it's definitely compelling to look into a variable rate. Because even though right now prime is at 5.45 with today's change, we anticipate it's going to continue to come down into 2025. So what you might see as, a low 5-year fixed rate is not something that I would recommend going with now. They're around, mid to low 4s. I think variable will eventually beat that out in the next year. And then certainly if you feel more comfortable with a fixed rate, as some people do, don't go any longer than a 3-year fixed.
Oh, okay.
Yeah. You can still see some pretty good deals on 3-year fixed, but they again are mid to low 4s. And I think next year we'll be seeing them come down into the 3s.
Okay.
So I think, your safest bet is either a variable rate mortgage or the 3-year fixed.
Right. Yeah. Oh, that makes sense. Yeah. Well, I think, the overall sentiment's looking positive. I know for the number of active listings that we have right now in December, I just checked the stats, we're right around 396 active listings on the market. A full year ago, December 2023, we were around 380. So it's pretty similar compared to last year.
That's excellent. But I do believe that you're probably going to see it, pick up a little bit with these rate announcements that are happening. Certainly it's good news coming into the holiday season where people will have the time to maybe think about it because they're, visiting family members or they have some time off of work to do some research in what's happening in the market and maybe do some house shopping.
That's right. Because we anticipate more listings coming on for sure in the spring of 2025. And I know I have buyer clients who've been waiting for today to find out. So there'll be more buyer activity and sellers will be coming on the market in 2025. So I think there'll be some nice inventory options for buyers out there. So,
excellent. I think there'll be some nice mortgage options to go with that.
Good. Excellent. So, Well, thank you so much for all the information.
It was my pleasure.
Pleasure learning a lot from you.
Thank you.
Thanks for watching.
Thank you.